Okay, yeah. Hey guys, just got my notes done and I was going to start recording and I thought, hey, we still got an hour and a half before the end of the market week. So I just said, all right, come on, let's go. I'll just kind of I'm going to just jump right into it. Let me share my screen with you. Take my ugly mug off the screen. Um, First of all, I hope you guys had a good Christmas and New Year's holiday. Um, we did, for the most part. I think most people know, and well, maybe you don't, but KLM, which has to be one of the shittiest airlines around, maybe Ryanair, it's probably worse. They charge you if you have some Tums in your pocket. But anyway, they lost our luggage going out and then also coming back. So it was a little bit interesting when I'm wearing the same flippin' underwear and socks for a week. We did get another pair or two, but you get the point. And the what was really amazing to me is the Europeans, all the dudes have really freaking small feet, like really small feet. I just stopped going in to these shoe stores. I'm looking for another pair of shoes because the only ones that I had were Kizik's, the ones that I wore on the plane. And if any of you guys have those, they're really more like moccasins than anything else. So I'm walking around the Christmas fairs and all these places, shivering my butt off because, of course, our big coats were in the luggage too. So I'm walking around there on all these cobblestones basically wearing moccasins. And my feet are pretty flat. So it got to be real interesting real quick. But every store I went into, they looked at me like I was from outer space, where I said, no, I'm actually from America. When I asked for shoes that were my size, I finally found some that were close that I bought. My toes were still jamming up against them, but at least I could walk. Anyway, that's my story. So we came back and Jennifer has COVID. So so I'm dealing with that. I don't have COVID. I've been coughing for a while, but that's from something else. But so Jen has COVID and I'm taking care of her. I don't get COVID. I mean, I've had it a couple times over the years, but just been tested for reasons other than me having symptoms. And the test would come back positive, and then I'd go to the gym and work out. So I'm not worried about that, but I got a lot of stuff going on with her. So family first. So let me get through this. Okay. So this shouldn't really be a surprise to anybody as far as what's going on with the market. It's been up and down and all around, but we're still just right at the 50-day moving average on these. I drew these, I think, a while ago. Yeah, well, you can see where on the 30th. And this is what I think. This is what I'd love to see, man. I would love to see. I would love to see these things just get really, really tight, and then right around my birthday, see this squirt to the upside. We could possibly be getting the same thing here. I have a very bullish outlook on 2026 with respect to the market. I am writing a book here. This is the book. When the Rules Change, AI Demographics and the New Reality of Work, Care, and the Economy by Dan Fitzpatrick. And it's where I'm well on the way to finishing this thing. I just got kind of, I don't know, I got inspiration about things a while ago and really just felt like this was a cool thing to do. It was just a different way of looking at things with respect to AI. What I'm seeing is a lot of attention. A lot of attention is being, okay, I'll just get into it. Okay. A lot of attention is being given to like companies like Nvidia, Micron, AMD, Palantir, these and like Meta, like I said, never frickin' underestimate the sociopath. Sooner or later, Zuckerberg's going to come out on top because he does stuff that other people would never dream of doing because they are ethical for the most part anyway. He's not. When you're not burdened by conscience, boy, it's amazing the kind of stuff you could do. Anyway, I digress. But the point is, everybody seems to be looking at how are these companies that are involved in AI, that are like Chat GPT and NVIDIA with their GPUs, and then Google with their TPUs, and all the like that are building the backbone of AI, and all the energy companies, because we rumor has it that you got to have a lot of electricity to run these brains. So that's the way people are focusing on this stuff for the most part. And I was just kind of looking at it from a different angle because it's always made sense to me that with AI, it's going to be disastrous for people that are working within the current paradigm, which is basically everybody. In other words, AI really does change the rules. Hence, when the rules change. AI really does change the rules and things. It changed the rules in economic. It's in economics. It changes the rules in data, in jobs data, in economic data, which is what all those folks in the clown car over at the Fed look at. And one of the things in general is this, and so you may want to watch out for this. I don't really see, I mean, yes, AI is going to replace a lot of jobs because think about a position, any position you have, including me, like my job consists of discrete tasks. It's every job is a task-driven job. I challenge you, and I'll win this challenge. I challenge you to find any job that cannot be broken down into discrete tasks, even if it's just a task of one. That's just the way the economy works. If I hire somebody, like if I hire Karen to be my personal assistant, which she is, I would give her a list of things to do: monitor my email, answer customer service, blah blah blah. I'd give her a list of things to do. That's her task list. That's her job. Her job is a list of tasks. Okay, fine. You get that. Hopefully you do. If you don't, I don't know what to tell you. So with AI, what AI does is it will take over some of the tasks that people do. With respect to some positions or some jobs, AI will take over all the tasks, everything. And if it does that, then you're out of a job. That's just the way it goes. For the most part, at least for the time being, you don't get paid to do nothing. At least most of the time. Some people do. Some people work really, really hard at doing nothing. But for the most part, you get paid for doing stuff. And if an AI bot can do it for you or instead of you, then you're going to lose your job. Now, what I think is going to be a huge dynamic more than that, because that's the kind of thing that just it just happens. Like Amazon dumped, it could be 3,000, it could be 30,000. I don't know the number, but they dumped a lot of jobs lately. And I think one of the reasons was AI, though typically companies don't come out and say, hey, we use artificial intelligence, so we don't need all these people. They'll come up with, just kind of a different way to say that. But I think the bigger story here is the fact that new jobs just are not going to be created. jobs will be eliminated by attrition. People will retire and they will not be replaced. So that's something that I think is going to be a big deal. But and I could get into all kinds of detail on this because I've studied it quite a bit from a non-technical and non-coding standpoint. I'm not smart enough or educated enough to know all that crap, but I have common sense and I've been around for a minute. So certain things I feel pretty strongly about, and this is one of them. There was in The Sun Also Rises, there's a dialogue, and I forget exactly what the context was. Some guy just filed bankruptcy, and somebody said, "So how did you go bankrupt?" And he said, "Well, two ways, gradually at first, and then all at once." Okay, I look at that and I see AI unfolding the same way. And right now, we're actually still in the gradual phase. We're still in the phase where there's a real big movement among businesses to try to figure out how best to use it. And I'm sure a lot of businesses are going to overshoot. They're going to fire too many people, then realize that, well, like, remember what Elon Musk did in his factory? I think it was up in the People's Republic of California, North Division, created an assembly line that was basically robotic. I don't think he had any humans or maybe a few in there. And he had to toss that because he said it wasn't exact enough. Like the robots couldn't quite get the parts straight. And so he he had to go back to the old fashioned way. Real live people grabbing real live auto parts, or at least moving them around with a machine. So anyway, I do think we're going to see some of that, but ultimately what's going to happen is businesses are going to kind of get the hang of it, and we're going to see a slowing jobs market. There's going to be fewer jobs created. Unemployment's going to be what it's going to be. It'll probably be higher. Now, the Fed, basically made of economic dipshits, they don't know anything that's useful. They know a lot of stuff. They know a lot of stuff, but none of it is useful. And now, how can I say that? You could say, well, Dan, how do you say that? You're just some knucklehead sitting in Coto de Caza with a T-shirt on, talking about the Fed. Well, I'll tell you why. Because it's clear for everybody to see. They have been behind the curve for as long as I have been trading, which goes back 30 years to the 1900s, to 1996. They've created nothing but chaos and volatility as they try to, in vain, tame the business cycle, to eliminate the cycle of boom and bust, and instead just make it really, really smooth. And ask anybody who got tripped up on the internet frenzy, anybody who got tripped up in the housing crisis, all of these types of things where, like back in, I'm really riffing now, back in Greenspan's era, when ultimately he sat before Congress, a broken man, when they're saying, like, dude, what happened? How could this happen? You kept rates like massively so low for so long. You basically given out free money, like your doppelganger, Mr. Magoo, and you freaking crashed the world. And he sits there and he says 6 words. There was a flaw in my model. Okay, so this is the maestro. This is the head of the Fed that everybody reveres. And this buffoon turns around and says, there was a flaw in my model. And so the point that I'm making is, am I dogging on the Fed? Well, I'd say, to put it mildly, hell yeah. They're not going to change. I don't care. I mean, Trump's gonna nominate somebody or appoint somebody. I don't know if they have to if they got to get approved by Congress. good luck with that. But sooner or later, there's going to be a new Fed chair. And we can pretty much guess that that Fed chair is going to be really, really pushing for more dovish policy, for free money, lower the rates, lower the rates, lower the rates, that kind of thing. I mean, that's what Trump's always been saying that he wants. I can't really opine credibly and say I agree with him or I disagree with him. That's where the knucklehead in the orange shirt in his music studio, that's where I have to acknowledge that I don't really know about that type of thing. I do know money's too expensive for people to buy homes and stuff like that. But anyway, so that's going to happen. They're going to get more of a dovish Fed, at least more of a push and pull than there has been now, where up until recently, everybody's going like, sure, Jerome, whatever you want, whatever you want. I don't like the fact that Trump called you an idiot and all that stuff. So that's going to change. However, they're still going to be looking at the same data and they're still going to be concerned about, oh, it's a slowing jobs growth market and this and that. And by the way, we could see more of a slowdown in the economy for various reasons. I don't really think one of the reasons, again, I could be wrong, but I don't think one of the reasons if the economy does slow, and I think it's slowing a little bit, I don't think one of the reasons is going to be because everybody's getting ditched from AI. It could be. I think there'll be a myriad of factors that are that cause that. But the Fed's going to look at all of these things. They're not going to have the correct interpretation because they're extremely dogmatic. They see things the same way just because they've always seen things the same way. And they're going to kind of miss the mark here on this stuff. But what I see is, again, I see a real impact, a real negative impact on jobs. But at the same time, there's a huge benefit to what AI is doing. And I've been talking, I think, for the last two videos that I've done about the assisted living industry and how the demographics are going to cause this big, massive explosion in demand. And by the way, that's really where the analogy that I came up with as far as Hemingway's The Sun Also Rises, gradually at first and then all at once. We're going to get a massive amount of octogenarians that are going to start coming into needing assisted living over the next few years, starting really kind of in this one. And this is, it's statistics, it's mathematics, it's history. And when I say history, I mean it's basically just according to the historical numbers. Once people step into their ninth decade, in other words, their 80s, they start going to the old folks' home, more of them. And so we don't have enough, like by a lot. We don't have enough capacity to go around. So there's going to be, and I talked about a few stocks, and I'm not talking about those stocks now. I'm just kind of giving you a sense of where I am, and you can go along with me, or you can disagree with me, and it's okay. I'm stating opinion, not fact. So I could totally be wrong. But what I see is this huge demand coming into the market. And so there's going to be, and that industry is so overly regulated, except for Minneapolis if you're a Somali. But that industry is so overly regulated that it takes a while to build facilities and get them approved and all that stuff. Again, if you want to go without regs, you know where to move to. Okay, there's 10,000 lakes there. Make sure you bring your water ski boat. But the point is that there's going to be this huge demand, and filling that demand, excuse me, creating the supply to meet all that demand is going to be really, really ugly. It's going to be really, really difficult. As it is now, I think the capacity The average capacity for current facilities is like 87% or so. So there's not a lot. There's not a lot of of room or slack in the system. But this is the point that I've been meandering around to. Again, I'm going to publish that book probably before I publish my smart trading book. This really came together pretty fast. AI is going to be huge in this industry. And these companies that are in the in the assisted living space, their profit margins ultimately are going to frickin' explode and go through the ceiling. Why? Because they will not have to hire near as many people as they have now to do all the things that they need to do to help our seniors have play their 18th hole with some kind of dignity. And that includes like medication, record keeping, even staffing, stuff like that. And there'll be a lot of things that are currently required for a doctor or a PA, or a nurse, a qualified nurse to approve, to look at, to do stuff like that. AI is perfect for that stuff. And if you want I'm talking right now. And if you want an example, just kind of get on your favorite AI bot and say, I have a pain in my abdomen. I've been having it for quite a while now, and my bowels aren't really moving very well, and I'm having a hard time keeping food down. I have a slight temperature, though it's not too bad, and my throat's kind of sore. So I just kind of feel sluggish. What do you think I have? Okay, you're going to get a bunch of stuff. Now, I just kind of made that stuff up. I don't know what it is. The point is, the technology that's coming into this space it's going to create a sea change. I mean, it's going to shake things up like you can't believe. And it has to, because of, again, I've studied the demographics, and I don't have I don't have the exact numbers in front of me, but like over the next 4 years, something like 15 to 18% of the baby boomers that are going to turn 80. I may not be explaining that exactly right. Now, you might say, like, well, yeah, but what about some of them have already died. Yeah, that's right. But you parse that with Social Security, with the Social Security data, and you can get a pretty good idea of what that number is. And trust me, it's big. So the point is, of all this, I want to keep watching these. I want to keep watching these companies. I laid out like 4 of them the other day. Welltower, Ventus, Care Trust, and then Ensign. None of them are at good buy points right now, but they're things that I'll watch, and they might not be actionable for a month or for a year. But this is just an industry that I'm really interested in. But to get away from that, so why am I looking at this? Okay, I'm looking at it because it's obvious. The link between AI and assisted living, in my view, is obvious that it's going to have a huge impact on that. It's going to really improve the care that we can provide our, let's just say, our venerated veterans of life. I think that's going to be a huge thing. And it's not just going to end there, of course, but that's just the best example that I can think of. And so I'm really super bullish on AI, on the effect of AI. As far as what companies are going to make money on that, I don't know. Take your pick. Google, Meta, Amazon, Nvidia, um, Micron, AMD, Taiwan Semi, Lattice Semiconductor. Um, you name it. They can all make money on this stuff, but that's the obvious stuff, and hence it's the boring stuff. I just kind of I like to look at things that are interesting to me, um, because I do. And so hopefully this is interesting to you, but it might not be. In which case, you know what? Let's just go to the charts. So, but in essence, though, like what I'm saying is though, the way we look, we meaning everybody who kind of pays attention to this stuff, the way we look at the economy, the way we look at the jobs market, the way we look at inflation, the way we look at the GDP and the CPI and the PPI and the ABC and the XYZ and the I don't know, let's get ready and go, all of that stuff. The way we look at all that stuff is not going to work in the future. And viewpoints, approaches to these types of things always have to play catch up. They're not out in front, never. Reality changes a lot faster than perception. And why? Because perception's based on reality. It's kind of logical to me. So the reality is going to change a long time before perceptions do. And so I'll just caution you all across the board to be focused on what you see, not what you think. Like I'm telling you what I think, but I've also said, Lord knows how many times, I could be wrong. So I'm not, if the market starts proving me wrong, or there's other, there's other factors or other data that comes in to where I'm saying like, I think that book that I wrote is really shit. I better put that in the bargain basement. Then I'll just modify and say, okay, guys, well, I was wrong about that. Frankly, that's what you have to do if you're going to be a successful trader. You have to be able, you have to have a flippant opinion. If you don't have an opinion, you're just a willow in the wind. You have to have an opinion, but to have your opinion actually become fact in your mind, where it's beyond an opinion, now you're stating a fact. That's really, really dangerous, because opinions and facts are two different things, and facts should change your opinion. What's that old saying? Facts don't care about your feelings, or something like that. So as a trader, you always want to be eager to be wrong, eager to be wrong. I want to look at stuff and say, okay, this is the way I think. So this is what I'm going to do. Now, okay, that's good. I'm going to go do this. I think there's a good reason for that. It's going to benefit me. Awesome. That's my expectation. So what do I want? Confirmation? Well, I guess, but not really, because that's what I think. That's what I think is going to happen. I think the stock's going to do this. You guys see me do envisioning all the time. I think the stock's going to do this. Okay, well, so as long as it's doing that, I mean, I guess you could say it's confirming my opinion, but it's actually, maybe this is just a nuance, but it's not confirming my opinion. It's doing what I expect. And so I don't even think about it. It's like, okay, fine, great. It's doing what I expect. What I'm looking for is the contrary opinion. I'm looking for the contrary fact. I'm looking for the contrary move in a stock that tells me, you know what, dude? Stock doesn't agree with you. You got to figure your stuff out. Okay, boom, I'm out of there. Or I'm in, whatever the case may be. But you have to be looking at stuff like this, guys, and you have to be willing to be wrong. If you are not, you're going to double down on a stock all the way down, and then you're going to go out of business. Or you're going to not use stops, because why use stops? I know I'm right on this. Oh, I don't need stops on this one. Or, oh, I'm going to go in extra big on this because I know I'm right. Okay, you are one trade away from disaster. Like, you can go on tilt really quickly if you don't have your rules and if you're not always eager and willing to be proven wrong. Okay, so so sorry. So that's kind of my long preamble. Well, hell, okay, goodbye. I'll see you guys later. I don't know how long I've been going, but these are just things that I think of, and I think about them particularly stridently early in the year because here's the thing. Okay, it's the first trading day of the year. I mean, I do like to take stock of where I am right now and say, okay, this is where I am right now. Let's go have a good year. That's what I that's what I think. As I mentioned recently in my last little diatribe, I don't have I no longer set specific goals. I want to double my account. I want to triple my account. I want to get 50%. I want to do this or that. I just strive to trade well, and striving to trade well means staying within my rules. So that's what I strive to do is I just want to stay within my rules. And as long as I do that, profit is assumed. It's just assumed. I don't expect to be proven wrong about my assumption that I'm going to make money as long as I'm following my rules. Now, if I do start to lose money and my expectations are not being met, well, then that's pretty simple too. Then I have to say, okay, well, it's never the market. So maybe it's just my rules. And then you go tighten up your rules. Like this is the whole part of my SMART uh, methodology that I think is great. I think it covers everything if you're applying it correctly. So if I'm really struggling, then I'm going like, okay, well, I'm doing something wrong. And so, oh, okay, well, my normal rules about buying breakouts are not working, even though I'm not really chasing this. I only got it 3% above the pivot point. It's got great volume. That works for me. Why did I lose money on that? Or why did I only make 5 or 6%? Usually that's a 10, 15, 20 percenter. Okay, well, gosh, I followed my rules. Okay, well, not the one about assessing market conditions. All my other rules were awesome. I followed them all. I got my stop, I got my position size, all this. Why aren't I making money? Okay, well, maybe because the market's really heavy. Maybe because the bulls are just kind of resting. They're meandering around. Nobody's really running too much. And so stocks are heavy. There's a lot of selling into strength. There's a lot of distribution in the market. Okay, well, yeah, but my stocks are really good stocks. Well, actually, no, they're not. Not if they run up and then they come back down. So the bottom line, though, on that just hypothetical situation is it's not me. I'm not doing anything wrong. It's not my rules that I'm applying. They're fine. I'm just missing something. I missed something. There's got to, oh, I know, Alan Greenspan. There was a flaw in my model. I missed something. And so, what I've just kind of described is something that you always want to be playing in your head. You always want to be questioning yourself. You want to have confidence, but you don't want to be overly confident. Confidence comes from feeling like you got a really good grasp of things. It's good to be in control. It's good to be a control freak, as long as you don't try to control stuff that you're not supposed to control or not able to control. So you guys get what I'm talking about here? Are you what's is it? Are you picking up what I'm throwing down? Um, so all right, I'll just let me get into it because I actually have um, a few stocks to a few stocks to trade or to look at anyway. I don't really, I don't have any get them while they're hot stocks right now. And you guys can see my screen okay, I'm assuming. Okay. Um, Okay, I had myself I had everything sorted out here. All right. So here it is. I'll get want to get right into it. Okay, so we're just kind of drifting around there. Same thing there. Now I mentioned 9 days ago when I first started, I'd like to see this pinch and ultimately move up. One thing to be mindful of, remember how we got this big gut-wrenching move when is it, late February into April? We're gonna get one of those again. I don't know whether it's from here or whether it's from the Ides of March, from Valentine's Day, or flipping Easter. I don't know. But somewhere along the line this year, we're going to get a big dump. Look at what happened in 2025. This was the big one. We did have a smaller one here, but look at back in 2024. This kind of felt a little bit sporty. Anytime the S&P falls below, say, 5 or 6% below its last high, is kind of a news bender. So we got a big one here and then a really massive one here in early 2025. We got a few of these. So don't just expect this to be up, up and away because it's not gonna happen. You can see we're actually just kind of rounding out. And from this trend, guys, you know, I could see this just kind of doing this. It'd be easy for me to envision that. For the 200-day or the 40-week moving average to just come up like this, there's no rule against it. Nothing to say that that's not going to happen. So what does that mean? Well, it means that for almost 4 months, this market is going to grind around sideways. But the cool thing is we're not just trading off of what the S&P is, or in this case, the NASDAQ. We're trading off individual opportunities. But it's never been my experience to the contrary that when the market's just drifting sideways, it's a little bit tougher to make money. You gotta there. It's not a target-rich environment. You just gotta find very, very select things to trade. That's what I do. That's kind of my job. My job is to teach you and it's to help you make money. That's it. And if I'm doing both of those things, then I feel really, really good about what I'm doing. Same thing with Scott and Andy and Sam. If we're helping you make money, showing you money making opportunities, and you're learning along the way, in my view, you're getting more than your money's worth. And if we are doing those things and you're not making money, then that's okay too. But at some point, you need to look in the mirror. And I get emails from people all the time that are humble in this way. You need to look in the mirror and say, am I really doing what I know I'm supposed to be doing? What Dan suggests, or Scott suggests, or Sam or Andy, am I really doing what they're suggesting? Or am I just kind of out there on the wild frontier because I don't want to do what they say for whatever reason? I'm not going to come up with any more hypotheticals. But so you just kind of have to decide how you're going to trade. All I can do is show you stuff that I see and share things with you that I think, and hopefully you're going to get something out of it. That's my goal. I believe it or not, I really don't just like to hear myself talk. But you're paying me to talk. So here I am earning my money. Okay. So let's see. All right. So mid caps and small caps. I think that actually mid caps will probably be the real surprise here for 2026 because mid caps, by definition, have more dough than small caps. And that means that with a little bit lower cost of money, mid caps are going to be able to take more advantage of that than the little teeny tiny companies. And the mid caps are the ones that tend to find it easier to gain market share from the big behemoths. So let's not lose sight of the mid caps, and there are a bunch of stocks in the mid cap, in the S&P mid cap stuff. So, and I could like here, just real quick. I haven't seen these. Okay, these are the top performers today. Okay, this is dog crap here. It's still going down. Yeah, maybe it's a bounce. Great. I'm going to buy this at 55.07. I'll sell it at 60. Maybe, except the 50-day moving average is going to get in your way. But this could be a trade. Rambus, nah, too early. Nope, too steep here. Like I can go down here. Lattice Semi. I actually have this on my list of stocks to cover because of the deal that the U.S. gave Taiwan Semi an equipment license so they can import chip making stuff to China. So that's a good thing, and it just goes beyond Taiwan Semi. It's really kind of a signal that AI manufacturing, like the whole stack, remains intact, funded, and very importantly, politically navigable. In other words, it's all a good thing. Anyway, so that's Lattice, and we can go on and on here, but you see, like just like the mid caps, which have been kind of sluggish for quite a while, you can look at the stocks that are gaining the most. For the most part, this would be an exception. For the most part, they're coming off the bottom. Fix. I got to write this down. Again, I haven't looked at these stocks today, guys. So I'm just kind of doing these cold. This is something that you want to keep track of. Fix could be ready to go. Would have been nice to have caught it earlier, but Fix. Jimmy, I just saw your question here about Fix. Yeah, I think this is still in some consolidation. It's had a heck of a move here. It really needs a little bit more work. If I was going to get involved in this, frankly, I would feel much more comfortable getting involved on a down day, on a day where the stock comes back a bit and then finds kind of some support. And the reason is because it's just like, where am I going to put my stop? Where am I going to put it? Am I going to put it clear down here below today's intraday low? That's 938.40. So I'm going to put it like at 938. Okay. If I do that, that's a 6.5% stop. Okay, that's fine. But then that's also like right where the 50-day moving average is. So then I got to go, okay, well, now I'll go below the 50. Okay, that's a 7.6% deal. But then, oh crap, well, I can't have my stop here because the stock did gap down here and then rally, or it fell down to this level and then it rallied up. So it'd be kind of silly to have my stop here when the stock could go down here and then rocket up again. So now I got to put my stop here. Okay, well, crap, that's 12 over 12%. Are you guys getting what I'm saying? So, and this is something that it shouldn't take you this long to reason this thing out. It should just be a visual thing. Like literally, you look at this and say, no, I got to wait for a pullback. Okay, so Carpenter, this could go too, but not quite yet. We'll put an alert here. See, like so far, the mid caps target rich environment. No, you can watch. Look, aluminum's doing well. Or aluminium, as they say over in not so great Britain. So this is running. It's too far too fast. Like I can't. That's just totally chasing it, and you don't want to be the dog chasing the bus. Okay, FTI. This could work. This could work too. UA, no, no, maybe. I mean, geez, 16, 17. Okay, only 385 or 390 to go. The point is, like, this is how you should be looking at. This is how you should be looking at your at different charts. You know, you can get them, and I'll be updating them all this weekend. You can get them on StockWatch, where you know that the stocks on those various lists, you know what the fundamentals are. You know that they're good, solid companies with good earnings and revenue. Like that's kind of That's that's the underlying basis for most of these lists. So, and then there's some technical considerations too. But if it checks all the boxes, that doesn't mean you got to buy, that doesn't mean you should buy them. Uh, Typically, you're not going to buy any of them, but maybe one tomorrow or maybe one next week or something. But the point is, so you should be putting all those in in a watch list and then just banging through them, knowing what you're looking for. That's something I'd be looking for. That's something I'd be looking for. Yeah, yeah, maybe. Everybody's on coherent. I think it's probably a crowded trade. See, like there's all of these. Are you guys seeing these? These are all possibilities. These are all, I don't see any of them that I want to say like, oh gosh, wait a minute, let me put this on the active trade list. But I'm seeing so many possibilities here on these stocks. Believe it or not, this looks like a good one for various reasons. And some of these don't. And so we could, I could just go through these and just cull them out and wind up at the end of the day, or however many days it takes me, I'm going to sneeze, having a list of stocks that I want to be watching every day. That's why I have this launch pad. I haven't updated it in a lot of them have launched. I haven't updated it in a month. But a lot of these on the launch pad, not all of them, but some of them have launched. Okay. Some of them are still ready to roll or starting to get ready to roll. So, but this is why I have this active trade list that not all these are 33. Yeah, like 30. I really don't want that. Um, I think there's 99. Yeah, 99 stocks on this list. And so I go through these on a very regular basis, and I'll cut them out. I'll cut them out if they're not interesting to me anymore. Like a month ago, oh, this was interesting. Okay, now not so much. I just put that on the ATI today. We're up, what, 17 cents. Yay. Okay. Well, wait a minute. Sorry, I gotta fix that. Okay. Anyway, so I have lists like this, and I'll just bang through them every day. Fix is on the list. This one needs to go, and so I'll just go through all of these and cull them on a pretty regular basis. So is this helping you guys? Is this kind of giving you a sense of maybe a different part of trading than maybe you get at other places? Here's the thing. A lot of people in our business, meaning in my business, a lot of people, they talk about buying a stock or an option or something like that. It's like, oh, hey, we did this. You should do this, blah, 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 and all that. And that's great. I mean, if you want to make money, you got to take action, obviously. But I think that what a lot of people miss is the way you make money is not what you buy and sell. It's what you don't buy and sell that's going to make the difference. And what I mean by that is, okay, so you bought such and such a stock and it's working. Okay, well, for Christ's sake, don't sell it then. Like, what are you going to do? You got an employee that's working and you're going to fire him because you're afraid that he's going to take a break. No, if you got a stock that's working, just shut up. Sit on your hands, move on. Don't do a damn thing. Just let it work. Don't sell. You don't make your money from selling. You realize the capital, you realize the gain from selling. But what's the gain? It's the money that you make on the in between. Now, what about other things? Okay, most of the time, you're going to be sitting around banging through charts like I'm doing here, and you're not going to be trading. Like some of these ones that I just went through, like these are really, really good possibilities. You should be writing these down. All of these, First Solar could, as soon as it jumps up about 281, 282, it's off to the races. So, but all of these things that I'm doing, guys, I could do this stuff all day long and not take one trade, but I would have a list, a really good list of possible trades, potential trades that I can share with you so that when the time comes, bam, now is when we take action. That's what I say. I probably don't say it enough. There's two time frames that you want to be focusing on. There's your decision time frame and there's your action time frame. For example, I can be looking at First Solar. I don't know what their fundamentals are, but they're probably not very good just because it's First Solar and they're generally not very good. Let's see. Well, they're not horrible. Actually, they're really not bad. Okay, so I'm in the decision mode here, guys. I'm trying to decide, do I want to buy First Solar? Okay, well, what's it got? Like, geez, margins are pretty good, 40s. I'll take that. Sales, they're accelerating, but it's not exactly off the charts. Earnings, they had a couple of crappy ones here, up a bit here. 2025, their estimates were, it's like for a 21% increase over 2024 here. So the outlook looks pretty good. We look at the earnings here, which kind of is reflects this flatline earnings. Okay, so, but at least it's not moving down. So I'm looking at First Solar and I see all this. Geez, they've had some pretty darn good earnings acceleration for a while. So I decide I want to buy this stock. Okay, that's my decision. I'm going to buy this stock. Now, does that mean I pull up my trading software and hit the button now? Like, um, do I hit the buy button and buy the stock here at 274.59? No. Okay, well, wait a minute. I've made the decision. I want to buy the stock. Okay, well, yeah, but that doesn't mean I'm going to buy it. It just means I've made that decision and I may change my mind. I'm only going to take action on that decision if the stock runs up above here. Actually, a little bit higher, but I've set the line there and I have an alert set on this as well. So I'll get a little bit of a head start on this to take action on my decision. So that's guys, that's just kind of how I look at trading. It's making a decision and taking action. And don't be don't be too eager to make a bunch of decisions. And by the way, though, every stock that you pass on, that's a decision. It's a decision to move on, to not do that stock. So actually, I'll go back and change what I just said. You're going to make a crap load of decisions every day. Just don't be too eager to take action. Because if you're taking too many actions, then by definition, you're over trading, you're hyper trading. If that's the case, you should instead be taking fewer actions, focus on the things that are working the most, and then just build the position that way. It's kind of like you want to give your best employees the most money, that because they're going to be rewarding you more. Okay, I'm really off the map. Okay, so I'm going to just kind of bang through this stuff, guys. Okay, gold and silver, I told you, this is not where you want to be. This is kind of where I envision this going. It's not really disappointing me now. You get a big move up and then down. This is the people that are buying here. These are the ones that still believe in the silver trade. These are the true believers. True believers tend to, if it's in a movie, they're the martyrs. They're the ones that meet their end in a very violent way. Don't be a true believer. Wait for the stock to settle out, give you another entry. Okay, so I'll just bank this. All of these are the same. None of them are trades right now. None of them. Did I do this one? Yeah, like all of these, they're, yeah, hey, it's down at the 50. Okay, great. Good for you. You saw it. Doesn't mean you're going to make money off it. Just means that it's at the 50. Okay, now we'll look at semiconductors. Look, semis were monstrous last year. You guys know this. They're really good. Well, so far, it's turning out to be kind of a banner year for them again, as we're not even done with the first trading day of the year. And I kind of alluded to this earlier that Taiwan Semi got a new license to export their stuff to China. Which is actually a good thing all the way around because China typically just steals our crap. So in this case, maybe we'll actually make some money on it for a change. That would be nice. So when we look at this, we look at Taiwan Semi, big pop today. I think this is one, frankly, that you could buy and probably make money. I mean, you're buying the pop, but we know what the news is. Heavier than average volume. We still got a half an hour to go, which means that I've been going for at least an hour here. But this is you don't see this kind of move and then an immediate reversal. Not on this kind of news. So this is institutional buying. I think you could buy this right now. Put your stop right down there. It's a really tight stop. Maybe I'll even do it 321.18. I'll get to this later. 309.50. Okay. I'll put this on the list later. If I forget, somebody please remind me. Okay. So then these are other ones. ASML giving us the same kind of thing. So why is this going up? Well, because who is ASML's largest customer? Taiwan Semi. Okay, so this is also one that can go. I don't know. Maybe I'll put this on the list too. So here, it's kind of a pricey one. And we'll say 1133.45. I'll clean these up later. Okay, so these are two that are going on the list. And you've got the numbers. Staying in the semi space. Also looking pretty nice. Micron. I don't know what that is. Also looking pretty nice. Western Digital, not quite yet. I want to buy this stock. Do I buy it now? No. I'll maybe take action on it if it hits this, or maybe I'll make a different decision. But right now, yeah, I want to buy this stock. I'm just waiting for the right time. Okay, then others that are kind of in the semi space, nothing going on here. I'm telling you, NVIDIA's dead money. At some point, it'll come alive again, but it ain't going to be this week or next week. AMD, biggest competitor for NVIDIA. Worth watching, not worth buying. KLA Corp, no, for various reasons that I can't get into. It just doesn't quite have that look. Okay, so then I'm going to look at some other stocks. Now, some of these, Scott, I had asked Scott earlier, I go like, dude, I got personal issues taking care of my better half. Haven't really been looking at the market much. You got any stocks for me? And so Scott gave me some that he covered last week, I guess. So AEIS, I think I already have an alert here, but so this is one that could be a good buy. Now, this one, I think it's still on the list, but this could be. You could look at this next week, and if it's still strong, if it's still holding up here, maybe you can consider buying some of this. I like the fact that this pullback has been on lower than average volume. The issue with that is just in general, the market lower than average volume because of the holidays. So only take this volume with a grain of salt. It's not dispositive, but it is important to know. Okay, Tetra, still on the list. This is still going fine. Johnson Controls. I'm looking at it. I would like to see it do a little more work before I get too lathered up about it. Tesla, I think their deliveries or their purchases or whatever were down lower than expected. Frankly, I love Elon Musk. I've come around several years ago. I used to think the guy was kind of a scammer and and all that, and which tells you a lot about me. It would be like me saying, "Oh, that almost trillionaire's an idiot." But anyway, I think the guy's a total revolutionary in such a good way. But the issue that I have with Tesla is, dude, come out with a different look. It's really okay. I think that for the average person, Model 3s, Model S's or whatever they all look the same. If you want to jack your sales up, come out with something that people get excited about. I don't think Elon's a member here, so I doubt he'll listen to me, but I wouldn't go there. Rivian, very volatile stock, as you know, and I expect it to remain volatile. This is a classic 1, 2, 3 squirt out from a volatility squeeze. Phase two's this pullback, hopefully, but not definitely. Hopefully, we'll get a rebound and then this base breakout will continue. But for now, this is just all we're getting here. Now, just a couple that have a real strong up-down volume, meaning there's a lot of institutional buying here. MKSI, this is not a good entry here, but I'll tell you one thing, 170 is not the top. This will continue to go higher just based on institutional participation, but that doesn't mean buy it here. This is a line of support, just generally speaking. You got to wait for it to pull back to that line. And then the last one here is Lumentum. This just continues to work. Just stay long this stock. So anyway, all right. So that's, Lord knows that's all I got. But I do have some questions here. So since I invited you, I might as well answer them. Okay. But that's the end of the formal impromptu presentation. So, okay. Wow. KN6UDK, no mic, no video tonight. That's a hell of a handle. Okay, what do I think of these charts? AGNC, the first thing I look at when I see REIT is what's going on there. That's a huge dividend, so I like that. Dana Lurch would have loved it. I miss that dude. But yeah, I think this is going higher, but this isn't where you want to buy the stock. You see the zigzaggy, so wait for a weekday, and then I think you're good with that. VYMI, yeah, I know I miss him, man. Okay, so you're looking at the yields. I don't see I don't know. This has to, since it's a high dividend yield, I don't know what the yield is. I don't know how this works, so I don't know anything about it with respect to the chart. Yeah, it's moving higher. Just try to get it closer to the 8-day EMA because that's where support is for this. And then the last one, Exxon. Yeah, this is a nice breakout. Landman, baby. Yeah, I mean, it's kind of just drifting around, grinding around here. I can't pound the table on this chart just because it's all over the place. And if you really want to look at it, try to do it as objectively as possible. This is a base for more than 3 years. So if you're going to be if you own this already, fine, no issue there. It's fine. But if you're going to be trading it, frankly, I think you probably find something that gives you a little better, reward. Ondas, I've never seen this before. I don't know anything about this. Where were you, Joe? Where were you the other day? Why didn't you ask me about it when I would have said it would be a good buy? So you kind of snoozed, buddy. I'm joking. So yeah, I mean, look, it's too extended. It is too extended for an entry now because you got to basically look at this area like right around here. That's going to be you have to just look at this as technical resistance. It might blast right through, but there you really do need to kind of pay attention to the basic tenets of technical analysis, and that is that resistance is resistance all the way up until it's not. And so we have to just assume at this point that it's resistance. Okay, Jimmy already went into this. Hopefully, even while I was talking, you made money. I'm kind of tempted to put this on the list as well, and I just may do. I'll have to wait for Monday to do this kind of stuff, guys. Um, you know. Uh, okay. Uh, Wanda, Happy New Year. Love you, baby. Okay, Astera, it's still building the base. It's still building the base. I don't think you got to be in a hurry to buy this. You look at the weekly chart. It is wanting to pop up. Volume's been really pretty low here. We like that when a stock's trending sideways. We want to see low volume. So I think ultimately this is going higher, but I can't pound the table right here and say, yeah, it's a good buy. So I hope that helps. Okay. Oh, Jimmy, I see FIX was added to the S&P around 12.5. Here. I don't know why I put this note here. I must have put this arrow there for a reason. But anyway, okay, so it was added to the S&P. I don't know, and for that matter, and maybe one of you guys can tell me, was this the announcement that it's going to be added to the S&P and then the actual addition is today? Maybe, but when I'm looking at this volume, I'm kind of getting the feeling more that the actual addition was this Friday on the 19th. So anyway, so good to know. I didn't know that. Thanks for telling me. Rocket Lab, yeah, this is going higher. This has been one heck of a rocket ship, Michael. Pardon the pun, play on words. So it's a pretty volatile, it's a pretty choppy stock. It's a real sporty stock to be trading. You can see that it's in an uptrend, I guess, but it's really bouncing along. And if you're just going to follow the bouncing ball, I think it's prudent to wait for the stock to pull back. Now, one thing I do, I haven't done this in a while, but one thing I do when I start to get this sense of I'm kind of getting the can't help it's, got to buy it. I will do this. I'll say, okay, where I see this up and down here. So this is where the stock is. I want to buy this stock and I want to buy it because I do not think it's ever going to come back into this box. I think it's going to somehow magically keep going and never come back and give me an opportunity to buy. Now, it may very well do that, guys. Could very well. I've seen this kind of chart before, but not too often. I've seen this chart a lot more, like a lot more, something like that. And so, like, my point is that when you look at a stock and you're really, really eager to buy it right now, just remember that like 99.9% of the time a stock is trading is not the best time for us to buy it. Now, institutions, sure, they're the ones that make stocks move. So they're buying or selling all the time. But for us, we're just riding on the back of the dragon. We're not the dragon. So though, if you ever go to Tallinn in Estonia, there are some really cool dragons there. I don't know why I said that, but it's true. Anyway, so I look at this and this is what I see. I see a box that is likely to get filled at least to some extent. And so I'd want to be looking at it more here. Does this make sense to you guys? Okay. Ray, okay. Yeah, cool. Thanks. Ray says, I really enjoy your midweek, any time of day meetings. Thanks. I do too, actually. It makes it easier on me too, not to go into the it's all about me level, but it kind of is. If I can do one midday and people find it more useful, I'm going to do it. I don't want to be obligated to because maybe I can't. But if I can do one intraday and it works for you guys, I'm here for you, baby. Okay, so on this, I just kind of talked about this. I've already talked about that. It's too close to resistance to buy responsibly. Doesn't mean that it's not going to go up. The real, nice uptrend here. Pretty choppy, but yeah, if you can get this around the 20-day moving average, and you can see it kind of fell down like that today. It's choppy, it's not smooth, but the uptrend is really pretty hard to. It's hard to negate. It's there. It's the real thing. Michael, I don't think this is a ticker. Okay. Okay. TAK, T-A-K. Now I don't know anything about this. This is, boy, I don't know, pick them. Just take a coin and flip it. There's no way you can buy it up here. There's no way. And the reason is because this is the trading box. This is the trading box right here. Like, you're right up at the top of the box. If you're buying it here, you're doing the this time is different trade. And generally, it's not. Okay, Vertiv, still consolidating here. Yeah, still consolidating here. And then Applied Digital. I've heard of this company, obviously, so of 32.2 million share buyers today. But I really don't know much about this, but I'll tell you on the chart, it just kind of looks like it needs to kind of settle out a little bit more to kind of digest all of this big rally and then more of a sell-off. So I'd want to see kind of more sideways trading with a lower volume. So okay, all right, guys, that's it. John, the midday sessions are actually the best. What are you saying? My other ones aren't? No, I'm joking. So yeah, anyway, look, I really appreciate it, guys. I really appreciate all of you coming in. I appreciate your membership, your subscription. There's a lot of different places that you can go for trading education, for trade ideas, stuff like that. There's a ton out there. But just so you know, and this is important, it's super important to me, otherwise I wouldn't be able to sleep at night. I don't look at any of these other teaching resources, whether it's IBD, which is awesome and I use it all the time, whether it's IBD or any of these other educational platforms. I don't look at any of them as competition. I don't have any competitors. Scott doesn't have any competitors. We're different. We're not the same, only cheaper, or not the same, only better. We're different. I strive to be different. I want to be different, which is why every so often, it's not like I do it deliberately, but every so often I will curse and say shit or whatever. And it's just because I just want to be more casual. I don't want to have to be sitting here in a suit and pretend that I'm somebody that I'm not. A lot of times when I'm here, even if I've got a nice shirt on, I'm barefoot. Or I got those stupid moccasins that served me so well on the cobblestones of Europe. So we're just different. And I appreciate you being a part of our different little tribe here. Okay? All right, guys. That's all I got for you. First day of the new year, done. And the cool thing is it's Friday too. And that's even more awesome. Okay. So I'll see you guys next week. Okay. I appreciate you. And by the way, awesome game last night. Oh my God. What is it? Ole Miss and Georgia. Good game.